This conference will now be recorded.
Yeah. So basically, I sent you the course content earlier, so you can keep that as a reference, and we will go through as per this, content.
Yes,
What. So in today's session, or probably it may slip to tomorrow also, some part of it. So
yes, sir.
basically, you need to understand the SAP FICA as a sub-ledger accounting system. What is exactly sub-ledger accounting system, and why FICA we are using in SAP ISU compared to standard account receivable, because standard account receivable is also a sub-ledger accounting system. But why in case of SAP ISU we are using FICA? So that I will try to explain you. Now, generally in SAP system, if we take, we have got accounting as a module, which is basically the heart of the business, because at the end of the day, for the business, we have to publish financial reports like balance sheet and then profit and loss statement. So this entire data, what is required for these reports like balance sheet, will actually come from the general ledger accounting system. So you have the central general ledger accounting system using the GL accounts, which are maintained in the book of accounts. Every company has to maintain a GL accounting system, and SAP provides the GL accounting environment under the company code. Basically, you'll be defining a company code, and this company code is basically representing the company from the financial accounting perspective. Okay, so under this particular company code, we have the GL accounting system, general ledger accounting system. Always the accounting system is central for the business. The entire business financial accounting data will be available in the GL accounting system, and based on this we publish the financial reports like balance sheet and profit and loss. But below the general ledger accounting system, we have one more layer of accounting, which is called sub ledger accounting system. Sub ledger accounting system. The sub ledger accounting system in the regular SAP system, that means I'm talking of general SAP ECC6, not talking about the industry specific solution like utility or insurance or telecom. The standard system has three types of sub ledger accounting systems. One is called customer accounts, which are also called as receivable accounts. These are also called receivable accounts. And then you have vendor accounts, which are basically the payable accounts, payable accounts. And then you have assets account, asset. These are the three types of sub-ledger accounting system you have it in general SAP. Okay. Now, what are these sub-ledger accounts? Like, we have got two main modules in SAP in logistics. Okay. Under the logistics, we have got two main modules. One is called sales and distribution, and one is called the vendor, basically management. Okay. One is sales and distribution, another is In sales and distribution, we sell products and services, and in we actually buy the products and services. Now, we are going to have regularly transactions happening with the customers and the vendors, and these transactions will lead to a kind of a invoice being prepared in the system. And when you save the invoice, it has to be posted into financial accounting. That means up to invoicing, we are doing regular sales and distribution business process. But once you prepare a SD invoice, the information has to be posted into financial accounting. Then only you know how much is the amount we have, basically billing the customer, or how much is going to be our revenue, what you are earning. Okay. So basically the process will go through like sales order. We create a sales order, then we create a delivery document, and in delivery document we will perform the inventory posting. We pick up the goods which you have to send to the customer and perform PGI, post good issue, and then based on that we prepare the billing document. Okay, so billing document is processed under billing process, billing module, and this is the last document what you create in SD. Starting from sales order, the billing document will become the last document. When you prepare the billing document, system will determine various GL accounts. Okay, these GL accounts are basically called revenue accounts, but actually what we are preparing is invoice. Okay, but that invoice is prepared in the name of payer. Okay, payer is the partner function given to customer. That means the customer who will make the payment to us for having purchased the goods and services. So this particular payer number will also act as an account. Okay, here we are talking of an accounting entity. The customer master number will act in two ways. When you prepare sales order delivery billing document, it is acting as a customer number. Okay, but when you prepare invoice and save it, whatever amount customer has to pay, that will be posted to customer account. That means customer number is a dual entity. It is acting as a customer number for processing the SD transactions. But when you prepare the invoice and save it, whatever amount you have to receive from the customer is posted to customer account. For instance, if you go to a typical customer master, okay, how it will look, I'll show it to you. You might have seen already, but now we will see from the accounting perspective, subledger accounting. Now, basically, when you maintain a customer master, we have three sections of data. The three sections of data are basically called the sales hero data, company code data, and general data. Okay. So the customer record is saved with the data dividing into three data groups. The data what we have is the general data, then you have got sales hero data, and company code data. Okay. Basically, here the customer number is 90,000. So whenever you prepare any sales document like quotation, inquiry, quotation, order, contract, delivery, billing, in all these transactions, you will be entering this particular customer number. So for the SD document processing, this is the number what we are using. But this number is also acting as an account. Okay. But it's not a GL account. It is called subledger account. Okay, GL account is what to maintain in the book of accounts. According to chart of account, you got a fixed number of GL accounts for the company. You can also add in the future whenever new GL accounting is required. Okay, so GL accounts are there in the book of account. From that, the data will be taken to prepare our balance sheet and profit and loss. But below the general ledger accounting system, we have another sets of account. One is basically called customer accounts and this is called vendor account. Each customer number will act as an account and actual amount what you receive from the customer will be posted to this account. Something like, we are having an account in a bank. Okay. Whenever you do any transaction with the bank, the amounts are posted to our account. If you deposit money, it is credited. If you withdraw the money, it is debited. Actually, that our account is from the banking perspective. For bank is maintaining our account as a customer account, but ours is basically a liability account because when you put the money into the account, they have to pay the money to us. Okay, so that's why it is credited to our account. Credit means actually it's a liability. They have to pay the money to us whenever you require. Okay. Likewise here, whenever you do any transaction with the customer, we have to post that amount to customer account. So when you prepare invoice, the amount will be debited to customer account because it's a receivable. It is an asset. Whenever the assets have to increase, we have to debit the account. So the amount will be debited to customer account. But you are posting amount to customer account so that we know what is the receivable. But this information has to be also posted into general ledger accounting system. Okay. Now, how will you post? In general ledger, we have to have a certain account to which the amount should be parallelly posted. So there are two accounting systems here. One is a subledger accounting system integrated with the general ledger accounting. And for that purpose, in the company code, we will have a reconciliation account. Okay. So what is this reconciliation account? The reconciliation account will get the total postings what we are doing it to various customers. Say for example here 90,000 is one customer and for this customer we have prepared invoice worth of 50,000 rupees. Another customer is there 90,000 or let us say 90,001. Okay. We have another customer 90,002. Okay. We have prepared an invoice for the first customer and the amount is 20,000. Okay. The moment you prepare the invoice and save it, this amount is posted to this account 90,000. Okay. Here prepare invoice for 30,000. It is posted to 90,001. And here you have prepared an invoice for 40,000. That is also posted to 9,002. So whenever you prepare any invoice, whatever is the amount due from the customer, we are posting it to that account so that at any given point of time, you can know how much is the receivable from each customer. Okay. If I open the account balance of the each of the customer, it will show us how much is the amount due. Okay. But while system is posting these amounts to the account, parallelly the amount will be posted to a reconciliation account. Now, what will be the reconciliation account? Reconciliation account is basically a grouping of various sub-ledger accounts. For example, for all the domestic customers, we have got one reconciliation account. Let's say that reconciliation account is 2,40,000. Okay, is that 2,40,000? This 2,40,000 is a basically GL account, and it is called as receivable reconciliation account. The moment you are posting this 20,000 to this particular account 90,000, parallelly the amount is posted to this account. So here also a posting will happen as 20,000 plus 30,000 was posted to 90,001. Same amount is also posted here 30,000. Likewise 40,000. So at any given point of time, you can know how much is the receivable in the market, because it is also one kind of asset. That's a liquid asset. You have to collect it from the customers, then it will become money for us actually. Okay, it's a money due from the market. Okay, so here it will say 2 plus 3, 5 plus 4, 9. Okay, so basically 90,000 is the amount what you have to collect from the various customers. So the basic idea is that on one side you want to know how much is receivable from the each customer. At the same time, you want to know how much is the total receivable in the market, because this amount is required for your future balance sheet preparation, or every month you may be preparing, or once in 3 months, once in a year is anyway legal requirement. Okay, so the customer account is integrated with the sub-ledger accounting system. That's why whenever you create a customer master, we have to enter in the customer master the company code data. Okay, and thereby we maintain this particular reconciliation account. So if you can see here, we have maintained one reconciliation account. There are so many other reconciliation accounts: receivable domestic, domestic receivable for one-time accounts, foreign receivables. Okay, there are some customers to whom we are exporting the goods and services. So whenever you create any foreign customer, we maintain this particular GL account. All these GL accounts are maintained in the general ledger accounting system. Now for this particular customer, I have prepared a order delivery billing. Okay. In the order delivery billing, we are using 90,000. Okay. So if you go to VA02, okay, the sales order what we have created, order number is, you can find out what was the order prepared for sales organization 0410 1011. This was the order I prepared. So here we can see an order was prepared, and that particular order we processed by using the customer number. The customer number is 90,000. Okay, we prepared the sales order for this particular order customer. So in the order we are entering this particular number. Then we have prepared a delivery document. Okay, a delivery document was prepared for the particular order, and in the delivery we have entered the particular customer number as 90,000. Of course, here the customer is acting as a shipped party. Okay, in the order we call it as sold party, in the delivery we call it as shipped party. 90,000 is the actual number of the customer. Then for this delivery we have prepared a billing document, invoice. Okay, and if you see the invoice, in the invoice also we have entered this particular number as 90,000. So for all the SG transaction, it is a number what is representing customer number for whom we are preparing the order delivery billing. But when the invoice was saved, the total amount due from the customer 53,000 net value plus tax. Okay, the total amount was debited to customer account, and thereby an accounting document was prepared. That means from invoice, whatever data we have got, we are posting that information into financial accounting system, and while posting, the total amount due from the customer has been debited to this particular account. Now you can see 90,000 is being shown as an account. Okay, all along it was showing as a customer number, but in the accounting system it is showing 90,000 as a account. So this 90,000 is basically a receivable account because you have to collect the money from the customer. And when the posting happened to 90,000, the total amount of 58,300, parallelly the amount was debited to the reconciliation account, 2,40,000. So the total amount what you have to collect from the customers will be 58,300. So like this, whenever you are posting any amount to the customer account, it will be parallelly posted to reconciliation account. And then tomorrow, if you receive the incoming payment, okay, let us say the customer 90,000 made a payment of 20,000 rupees. Okay, customer 90,001 made a partial payment of 25,000, and 90,002 also made a partial payment of 2,000. All these amounts will be posted to the content account. Okay, it will be credited to the receivable account, that is the reconciliation account. So here it will become minus 20,000. Then here it will become minus 25,000, and here it will become minus 40,000. That means whenever you are debiting or crediting the customer account, parallel the amounts are also debited and credited to the reconciliation account. So now the account balance will become 90 minus 20, 70, 70 minus 25, that is 55, 55 minus 40, that is 15,000. This is the amount totally due from the market. Okay, and here it will be the same scenario. Here it is actually 10. Here it is 10, and here it is 15. Okay, 25,000 totally. So this will become 25,000 rupees difference actually. Okay, so the total sum total of the all the account balances put together will be equal to the balance of the reconciliation account. So whenever you want to see how much is the account balance, how will you find out? You can find out account balance for the particular account itself. Okay, that's the customer account. But at any given point of time, you can find out what is the total receivable account. Only thing in the case of customer account, we can see various open items. Basically, what is open item? The moment you prepare the invoice, an amount is posted to customer account. It is called open item. Whenever you have an open item, it has to be cleared. Okay. In accounting terminology, you can say it needs an offsetting entry. If suppose you have posted a amount to customer account, it is a debit entry. Okay, we have to offset it by making a credit entry. That credit entry will happen when you get the incoming payment. Okay, the moment the incoming payment is entered, it is credited to the customer account, and it is actually clearing the document. Opening, it is actually clearing the accounting document. So if you go to accounting, and then if you go to financial accounting, and then account receivable, and then our document entry account. Okay, display the balances. Okay, display the balances means display the account balance. Something like if I open my the uh, passbook of the bank, I can see the balance. Okay, whatever amounts debited, whatever amounts credited, and what is that balance amount remaining in my account. Likewise here, every account will have a account balance. Here 90,000 is acting as a account by itself, and we are posting the financial accounting data into the company code, which is 2000, and let's say the fiscal year is 2019. Okay, and then if you see the data, it will show the account balance. Basically, every account is acting like a T. It is like a T structure. Okay, every account is acting like a T structure. Something like you can say, and then you can say like a T structure. In the accounting parlance, okay, the left side of the T, it is a debit, right side is a credit. Okay, that means whenever we are making an invoice, the amount will come and sit here in this particular area. Okay, whenever you are posting the amount to the customer credit, it will come and sit here. The credit can happen because of the incoming payment, or suppose you have done some reversal. Okay, we prepared an invoice, but there was something wrong with the invoice, so I have cancelled it, I have reversed it. Okay, so when you prepared invoice, it was debited, now it is crediting. Okay, right now the payment has not come, so there is no credit here, but debit is there. Debit balance is 58,300. Okay, but this 58,300 is because of how many invoices. Okay, this 58,300 could be for one invoice, two invoices, three invoices. That you can find out as a line item. Okay, so if you double click, it will take us to the accounting document what was posted. Okay, when you prepared the invoice was posted to financial accounting, and thereby an accounting document was prepared. Okay, the document number is showing here as 90011. Okay, this is the actually the document number, invoice number, because of which the accounting document was prepared. And here you can see the amount is 58,300. Net amount due is on 10/11. Okay, you have got payment term, you have to make the payment immediately. Okay, so that's the reason it is showing the amount is due already, and the status is saying it is basically open. Open means red mark. Open means the amount is yet to be received by the customer. But when the amount is received, the open item is cleared, then it will automatically turn into green color. Okay, so that means that amount has been cleared by the customer. So like this, we are doing the transactions with the customer. Whenever you prepare any invoice, the amount is debited to customer account, and parallel the amount is posted to the reconciliation account. And whenever the incoming payment will come, the amount is credited to customer account. Thereby, it is clearing the open item. Sometimes you may do full clearing, sometimes you may do partial clearing. Okay. Suppose here 58,300 is there. If customer is paying only 30,000, that means out of 58,300, we are clearing only 30,000. So it will clear 30,000. That amount will be shown in the green color, but it will show another balance open item of 28,300. That amount is still due. So a new open item will be added showing that 28,300 has to be paid by the customer. Okay. So like this, transactions, whatever you do in SD are posted into subledger accounting system, and the subledger accounting system is integrated with the general ledger accounting. Okay, so this amount will be actually debited to also parallelly to reconciliation account. But when you see the account balance of reconciliation account, it will not show any line item. Okay, because there could be thousands of invoices you prepare for the various customers, and the amounts are all posted to reconciliation account, so you cannot see a line item display. So if you go to the account balance for the particular GL account, what we are seeing account, display the account balance. Okay, that is the line items, display balances. I want to see what is the receivable totally in my company. Okay, for the GL account, 2,40,000. My GL account is 2,40,000, and year is this, and then run the program. So here it will show the total debit. See, we have done so many debits here because we have done so many transactions, and then in all these cases, the amounts have been posted. Okay. Now in the month of November, it is showing 61,300. Okay. The 61,300 is coming because of maybe one customer, two customers, three customers. We cannot find out the details from here because there will be so many open items. No line item display is possible for the account. Okay. You cannot see any line item display for the 2,40,000, but you can always see for the individual account balance what is the account balance. You can see the open item. Okay, so this is how the general ledger accounting system is integrated with the subledger accounting system. Now similar case will happen with the vendor. In case of vendor, what happens? The amount is credited to vendor account. It's a payable account. Customer account, we are debiting when you prepare the invoice. And when you prepare the invoice for the vendor, it's the incoming invoice. Vendor will supply the goods to us. We receive the goods. Then we enter the incoming invoice from the vendor. The vendor has sent the invoice to us to make the payment. Okay. So where there the vendor number will act as a payable account. It's a payable account. Say for example, if I go to an account balance in the vendor, okay, account, display the account balances, FPL entry. This is for the customer account. But if you go to accounts payable, okay, here accounts receivable means customer accounts. Here accounts payable means vendor accounts. Okay. So if I go to display the account balances, okay. Now I got a vendor, let us say V20,000. V2000 is a vendor account number. And if I check here, the vendor has given us invoice worth of totally 8,71,200. Now you can see it is posted on the credit side. Okay. So there is a credit balance. Now how it will be balanced? Whenever you make a payment to the vendor, it is debited to vendor account. Thereby the receivables, the payables are reduced. Okay. So the transactions are exactly opposite. In case of customer, the due amounts are posted to customer account as a receivable debit entry. But whereas in the case of vendor, whenever the vendor will send the invoice to us, we enter the incoming invoice and the amount to be paid to the vendor is posted on the credit side of the account. Okay. Now we should not confuse debit is always plus and credit is always minus. It's not so. Actually, whenever you post on the left side of the T structure, it is taken as a debit entry. Whenever you post on the right side of the T structure, it is taken as a credit. But when you do the debit balance, the debit amount minus credit amount will be the due account. In the case of customer account, debit balance is plus or it can be zero. Sometimes it can be minus. Okay. If suppose customer has paid more than the amount what we have to receive, then that will be lying as a credit amount. Okay. In case of vendor, it is mostly the credit balance. That means you have credited the amount to vendor, you have paid the amount. If you have not paid the full amount to the vendors, all vendors put together, it will show the credit balance. Customer account and the receivable accounts are basically debit balances and vendor accounts are basically credit balances. Okay. So this is how the accounting will happen. And for every vendor account, there will be a reconciliation account. So if you go to vendor master, XK02, vendor master, here our vendor is V2000. And if you go to the accounting information in the particular company code, if you continue, V2000 is the account, it's a sub-ledger account, it's called payable account. Okay. Here you are given a reconciliation account, 4,40,000. So whenever you enter any incoming invoice for V2000, the amount is parallelly posted to 4,40,000. Okay. That is the actual reconciliation account. So if you go to account balance here, okay, 4,40,000. If you go to general ledger, account balance, 4,40,000. But this is a reconciliation account for the payable. That is basically the liability account, 4,40,000. This is the GL account. And if you see here, what is the total amount due? No line item is displayed in the company code. Execute. So we will say charge. Okay, this is the general ledger account balances. Okay, 2,40,000. So here you can see this is the okay, this is for 4,40,000. Here it is 4,40,000 is a GL account. It's a reconciliation account for the vendors. So here it is showing the credit balance. Okay, so far you have posted in the month of ninth month, and in the September we have done the posting, and this is the amount which is due totally from all the vendors put together. Okay. This is how the sub-ledger accounting system is integrated with the general ledger accounting system. This is as far as the general SAP system is concerned. Okay. Coming to industry-specific solution. Okay. We have got various industry-specific solutions given by SAP. To start with, SAP started with the industry-specific solution way back in around 1996 or so. SAP released two IS solutions, industry-specific solution. One was SAP Retail, and then another one was Utilities. Okay, SAP Utilities. Now, Utilities is basically a solution which is used for companies which are providing utility services. Okay, like we are getting electricity, water, and gas. Gas means here basically the cooking gas which comes through the pipeline. So in country India, we don't have that system still. In many of the states, you don't have the cooking gas available through the pipeline. We still use the cylinders, but otherwise we get electricity and the water at the doorstep. Okay. Now, these are the services provided by the utility company, and generally there will be a distribution company. If I take electricity, there will be a distribution company, which is basically called pole and wire company. Okay, it is distributing the electricity to all the homes, offices, factories. Basically, electricity is being generated, transmitted, and then distributed. Okay, so distribution company will provide the distribution services for the utility services. Okay. Now here also you will have to have the accounting system. Okay, but there's a difference between the accounting system what you use in general SAP and in utility. Now after utilities there came many other IS solutions, like we had telecom SAP system, we have got insurance. Okay, then we have got banking system. Okay, so in some of these industry specific solution we are doing business with the customer, but we don't call them as customers, we call them as consumers. Okay, like if you take utility, telecom, insurance, these companies have got something common in the industry. What is the common factor? In the typical sales and distribution, you have customers. You maintain customer master record where you maintain general data, sales area data, accounting data. That kind of data is required to map the various sales documents, sales processes. Sometimes you have to create inquiry, you have to create quotation, order, delivery, billing. Okay. But it comes to utility or telecom or insurance, you don't have to maintain customer master record. Why? Because you're not going to make any quotation, sales order, delivery, billing. You don't do. Of course, billing we do, but that is a different billing, what we are doing. Okay. So, and another important factor, the difference is in sales and distribution, we have customers, but it won't be too large. Okay. Maybe a particular company has got 2,000 customers or 5,000 customers or 10,000 customers, but there's nothing like a periodic activity. Okay. Just because you've got 20,000 customers, it doesn't mean that we prepare 20,000 invoices in a month, or, every customer will order 4 times, definitely, and then 20,000 into 5 orders, that many orders we create. It doesn't happen. Whenever the customer will order, we prepare the sales order, delivery, billing. So there's nothing like a periodic activity. Okay. But when it comes to utilities, the typical sales and distribution is described as B2B, okay, business to business. One business is selling the products and services to another business. Okay, like typically we have got a manufacturing company which is manufacturing, let's say, electrical motor, pumps, switchgear, or let's say some cables. Okay, they are supplying these products to their dealers or some corporate customers or export. Okay, but they are not selling directly to any consumer. Okay, I cannot go and buy a Kirloskar motor directly from Kirloskar company. Okay, I'm a consumer, I want a pump at home. Okay, then I go to the nearest dealer and buy the pump from the Kirloskar dealer. Okay, actually Kirloskar is billing the motors and pumps to dealer, and dealer will in turn sell to me or the consumers. Okay, so the company is not dealing directly with the consumer, they're dealing with a definite number of the customers what they have in their operation. Okay, but coming to utility, the company is directly doing the transaction with the consumer. In a utility company or a telecom company, if you see, the companies are having the accounts. Okay, like in utility company, the company is providing, distribution company is providing utility services to around 5 million consumers or 10 million consumers. A telecom company operating probably all over India has got certain consumers in each state, okay, which could be in millions. Okay, like Airtel or any other company. Okay, now for all these consumers, there are some periodic activities what we do. Okay, for example, in utility company, every month we perform meter reading. We take a meter reading and then bill it and then invoice it. Then the amount is posted. Okay. But 10 million consumers means definitely 10 million invoices have to be prepared. Okay. That much amount you have to collect from the market. That means each consumer you have to do periodical billing and invoicing. Okay. Although some accounts may not be doing monthly billing, they may be bi-monthly or once in 3 months. But if you take telecom companies also, they will be mostly doing all the monthly billings. That means every month on a particular date, I receive my bill, invoice, what is to be paid for the telecom services. Like that, utility company will provide me invoice every month by, let's say, 9th or 10th. Somebody will get on 15th, somebody will get on 20th. So every day we are doing, billing activity and invoicing, and particular, set of accounts are posted for that particular billing and invoices each month on a particular day. Okay. So the number of transactions what we do are also phenomenal. Okay. Now in the case of SD, what happened? Just now we saw we created one order, then we created one delivery, and then we created one billing. Okay. For the billing, it has directly done the posting to FI, and then it has prepared one accounting document. It has prepared one accounting document. While preparing the posting into accounting document, it will also determine various GL accounts. Okay, like for example, if you go to the particular billing document, what you saw just now, VF02. Okay, in the billing document, the pricing calculation is happening. Okay, so here it is showing what is their total amount customer has to pay, but how it has been calculated, it has done some pricing calculation here. The product is being sold at a price of 11,500. They are buying 5 pieces, so the price is 57,500. That's the price what we are charging to customer for supplying each product. Then you are giving some discount to the customer, 1,000 rupees for each piece, so the total discount in the order is 5,000 rupees. Then you are charging some, the freight to customer. 500 rupees is basically the tax, the freight amount what you are charging. So the total net value is coming to 53,000. Okay. On 53,000, we are also charging the tax amount. Tax is being calculated, and the tax is at 10% coming to 5,300. Okay. So the net is 53,000. Tax is 5,300. When you are posting the amount to the account, the customer account is posted with 58,300. That's the total amount due. That's on the debit side. Okay. But it has to balance on the credit side. So what it will do, this particular price amount, what you see, it is posted to the price account. Okay. So if you double click here, if you show the conditions, the price, whatever is there in the billing document, that will be, basically credited to price account. This is, you require one GL account for this price amount. You require one GL account for discount. You require one GL account for freight, and you require one GL account for tax. There are 4 conditions here: price, discount, freight, and tax. Individually, these amounts have to be posted to individual accounts. These accounts are called revenue accounts. These accounts are called revenue accounts. So if you go to the accounting document, here you can see customer account is debited with 58,300, but in the particular document we have got some charges. What are charges? The price amount is 57,500. It is credited to the GL account 5 lakh. Discount is 5,000 rupees. It is debited to 500 100 GL account, which is a discount account. It is an expense account. Then the freight is 500. It is credited to 57,450. And then 5,300 is the amount which is posted to tax account. So when you prepare the billing document, it will determine the GL accounts which are required to be posted, the revenue accounts, which account price should be posted, which account discount should be posted, which account tax to be posted, which account freight to be posted. Unless the account determination happens, you cannot prepare an invoice, because although you know what is the total amount customer has to pay, that amount has to be broken down into various revenue items. How much is the price, how much is the discount, how much is the freight, and the tax. And these amounts are individually posted to revenue accounts, and the total amount is debited to customer account, and parallelly the amount is posted to reconciliation account. That means for every invoice there is one accounting document, and various GL accounts are posted. In this case, how many accounts? 1, 2, 3, 4. 4 revenue accounts, and then the customer account is posted. It's a receivable account, but for that you got a GL account 2,40,000. So how many general ledger accounts you are posting? Reconciliation account, price account, discount account, freight account, and the tax account. 5 GL accounts we are posting. One invoice, in this case, we are posting 5 accounts. Sometimes there could be more than 5. You've got packing and forwarding charge. I mean, so many different charges you may calculate. For each one, there will be an account to be posted. Okay. In this scenario, let us say this is a scenario repeating for all the customers. Okay. For every billing document created, there is one financial accounting document posted, accounting document. 5 accounts are determined, and then it is posting to your, GL accounts. But the SD and FI direct integration is there. When you prepare the invoice, directly it has posted to financial accounting. Now let us take, for instance, a utility company or a telecom company. In utility company, what happens? You've got 10 million consumers. That means, or let's say 5 million consumers in the operation. That means definitely in a month you have to prepare 5 million invoices. Okay. But you cannot possibly create all the invoices in one day because you have to collect the meter readings, billing, and then invoicing. Okay. So you spread over the entire billing activity throughout the month. Okay. On first of month, we invoice for some accounts. Second day, we invoice some other accounts. Third, we invoice some more accounts. Like that, in a whole month, you are splitting the complete load of invoicing into n number of groups of accounts. Okay. But let us say every day we are posting around 1 lakh invoices or 2 lakh invoices. Now, here comes the difference in terms of accounting. Now, imagine we prepared 10 lakh invoices for a account in the, you know, utility or a telecom. You can say 10 million accounts, 10 lakh GL account, 10 lakh accounts we are posting the invoices in a day. Okay. Each invoice, if suppose it is managed like financial accounting, what you're doing in the SD, what would happen? 10 lakh invoices means 10 lakh, accounting documents. Okay. And just like here in SD, you got price discount. There also you have charge amounts. Okay. That means, let us say each invoice has got 3 accounts. That means you are posting 10 lakh invoices directly into financial accounting, and then each invoice has got 3 accounts. That means basically 3 into 10, 30 lakh accounts, 30 lakh accounts you are posting in a day. Okay. And each account is posted at least one time. Okay. That means, let's say there is a common GL account for each of the invoice. Let's say price. Okay. In every invoice, you will have a price. Okay. 10 lakh invoices means 10 lakh amounts are there for the price account. That means the same account you are posting 10 lakh times. You can see the amount of posting what you are posting, the volume of posting what you are doing. And this is for one day. And if you take 30 days, you can see the amount of data what you have to post into financial accounting. That's why it is not viable. One is you are not doing individually. In case of SD, I get an order, delivery billing, you post it to financial accounting. But in case of ISU or telecom, you cannot go on preparing individual invoice. I mean, you will not be able to finish the load. Okay. So you'll do always mass processing. Okay. These 10 lakh invoices, I would have broken down into 2 lots. First lot of 5 lakh, second lot of 5 lakh. That means you're doing everything in the background. It has to determine the GL accounts and then post it to financial accounting, accounting document posted. It's going to be very time consuming, and you are pumping too much of data into financial accounting. So this is a problem in some of the industry specific, businesses like insurance, telecom, utilities. So considering this, the volume of data, what you have to post, SAP provided a separate subledger accounting system, which is called FICA. Okay. The FICA came into existence subsequently once the ISU was released. ISU was released along with FICA as the subledger accounting system. Then came telecom, then insurance. In all these industry-specific solutions, we are not using the standard account receivable, the customer accounts. We are using contract accounting system. Okay. Like in general SAP, customer is an account. We create a customer account and you have the account also created. But in the case of ISU or telecom or insurance, we don't actually create a customer account. We don't require the customer account. Why? Because you don't require the customer master. Nothing is required to use the customer. You're not getting sales order, delivery, billing. Okay. So instead of that, what we do in all these solutions, we create something called a business partner. Okay. What is business partner? Business partner is a consumer. Okay, in utility company, let us say we've got 5 million consumers. Okay, these consumers have to be maintained in our system, but we don't create any customer record for them. We create for them BP, a business partner. So SAP introduced parallelly another concept of maintaining master records called BP. BP is a cross application component. It is used in multiple industry specific solutions. Except sales and distribution in general SAP, in all other solutions like telecom, insurance, utilities, healthcare, banks, banking solution, in all these solutions, we don't create any customer record. We rather create something called a business partner. Okay. So business partner is a cross application component. It will help us to map the consumer in our system. Say for example, if we take utility solution, okay, if I go to utility solution, we create something called a business partner. The business partner is basically a consumer. Now this consumer can be an individual consumer, like a household consumer. Okay, let's say I'm buying electricity, water and gas. I'm using them for my household purpose. Okay, but there could be some business partners who are buying electricity, water for the commercial purpose. Let's say there is a bank, there is a factory. They also require electricity, but they're using it for the business purpose, business activities. Maybe a factory requires electricity to make some production. Let's say a particular office in the commercial area requires electricity to run the office. Okay, so the tariff structure will change. Okay, residential consumers will be billed and charged separately with some tariff structure. Likewise, commercial and the industry customers. But actually, these are all created in our system as not customers, but the BP. Okay, a typical business partner record will look something like this: FPP2, contract partner. In ISU, you create a business partner as a contract partner. I think in telecom also you must be creating a business partner. Okay. I didn't work in telecom solution, but I have some vague idea. So let's say business partner is 178. Okay. Now 178 is the business partner. Just like 90,000 was the customer, here we have got a BP which is 178. That is the number what we are identifying. But BP master is a very general data. Okay. Like it is having the data like what is the name of the business partner, what is the address, okay, what is the identification details, okay, but nowhere you enter any accounting related data. First of all, when you create a business partner, you're not maintaining any company code data. So tomorrow if you prepare an invoice for the BP, how will you account it? Because it is not an account by itself. Customer number is an account by itself, but BP number is not an account by itself. So now what to do? After creating business partner, we create the contract account using the FICA. So for the accounting purpose, we have a separate master record for the account, which is called contract account. So we will have to see now how FICA will actually help us. So today I've given you a brief introduction about the standard accounts receivable and payable. But now we have to see in industry specific solution like ISU or insurance, how we are going to manage the accounting system, sub-ledger accounting system. Instead of using the standard accounts receivable, we'll be using FICA. Okay. So now we will expand this discussion tomorrow to understand what is the scope of FICA in general, okay, and what is the main activity what happens in FICA.
No, sir, I have a doubt.
Yeah.
Yeah, actually,
And
actually,
one more thing, daily up to what time you can have the class? Morning?
sir, I am working second shift, so
Yeah.
and
Okay.
so no issues
So
for that.
no issues. Okay. Okay. Okay.
Uh,
Fine. Yeah.
Actually, here actually I'm working this Geo project. So
Okay.
for creation of customers, we are using CRM. So
Okay.
customers are created in CRM,
Okay.
and at that time only contract accounts are created. That
Created.
flows
Okay.
from CRM to CI,
CI.
and from CI to CC,
CC.
conversion charge,
Okay.
and the whole process of delivery, that delivery and that PGI is not there.
Okay.
And
Yeah. That's what. That's what. That's why you don't use actually typically customer record. In utility also you don't have any order, delivery, PGI, billing, nothing is there. But we have different billing here, billing and invoicing. Likewise in telecom also you are having convergent invoicing. Okay.
yes, sir,
Now
yes, sir.
all the invoices are the source document which FICA document is posted. Okay. So what is the FICA document and why FICA came? That is what you have to expand now in the discussion tomorrow. Okay.
Yes.
So that time I will explain you. So the central master data in case of FICA will be business partner and your FICA account. That's the contract account. So
Okay.
compared to sales and distribution, how the posting will happen here. Okay. Now here I'll be explaining in general about IS utility because I don't have telecom, but
Yes.
we can keep aside the whether it's a telecom or whether it is a ISC or insurance. We are interested in FICA accounts and FICA document. Okay.
Yes.
So I will show you how to post to FICA directly into FICA, but otherwise generically business process like we have got a ISU invoice and then how you post into FICA, or tomorrow suppose if you prepare invoice in SD, how will you post into FICA? The main heart of FICA is how you process a FICA document. FICA document has to be posted first in FICA, okay? Then the entire FICA module will concentrate on the life cycle of the FICA document, how you process those FICA documents, okay? The origin of FICA document can be from various sources, okay? Now, for example, we are talking of a FICA document. What is FICA document? Whenever you prepare any invoices, we are not posting anything directly into financial accounting. It is first getting posted into FICA. Suppose if I prepare a ISU invoice, just like in SD, we prepared invoice. In ISU, every month I prepare an invoice for each business partner. But when you prepare the invoice here, it is not posting directly into financial accounting. It will be posting into FICA, the FICA document. Okay? That means origin of the FICA document is the invoice coming from the ISU. Likewise, you have in telecom an invoice prepared, and then you are posting into FICA. A FICA document is prepared. Okay. Or tomorrow in ISU itself, we are doing some SD transaction like service billing. So I'll be preparing a SD invoice, okay? And then it is posted into the FICA, okay? FICA document is posted. Or let's say we've got an insurance company where they prepare every month premium insurance invoices, and that will be posted into FICA. That means FICA is a common sub-ledger accounting system for various industry specific solutions like ISU, telecom, insurance, okay? So we need not be specific to any one industry where invoice is prepared. Rather, our concentration should start on the FICA, like what is the process of handling this particular FICA document, and the contract account itself, what you maintain, how you maintain it, okay? Then the FICA processes, then account balances, and then your dunning, and then your incoming payments, payment run, interest calculation, all these processes will happen in the FICA itself. So whatever you learn in FICA in ISU will be same in telecom, in insurance, or
Yes,
any
sir.
other.
They're
They
done
won't.
when
Yeah.
this is part of here also in
Yes.
CI.
Yes. So that is how you
Dunning
have
is
to.
Dunning is basically part of FICA. This is not part
FICA.
of CI.
It's
Okay.
not, yeah. It's a part of FICA. Actually, you have to run the Dunning run. For every
Okay.
Dunning run, it will determine the Dunning activity, and Dunning level will be found out. How many Dunning levels you have run, and for each Dunning level, one Dunning activity will happen. Okay. So all these configurations will be doing. So our entire system configuration will happen in financial accounting, in FICA, but at the same time, because you are working in ISU, I will also show you some ISU process, okay? Like how to prepare ISU invoice, even though it is not required for you, but you may like to know, although I can directly post into FICA, which will be doing most of the time to understand the FICA document. I can go to FICA and then directly post, but this document can also be posted because of an invoice coming from the ISU or SD or insurance, okay?
Sir,
So all
invoicing,
our,
uh,
yeah.
sir, invoicing is part of that this FICA or this is part of that SAP CI side? Because here,
Ha, yeah, invoicing is part of the your industry specific solution, like telecom. Telecom
okay,
is preparing invoice, ISU is preparing ISU invoice, insurance
okay,
preparing insurance invoice, SD is preparing SD invoice. So invoice is not specifically FICA. Invoice is a part of business process. But the
okay.
moment you prepare invoice, how you get into the accounting system? That's where FICA comes into picture.
Yeah.
You got a
Uh,
point?
so I want to know the middle part of this is invoicing, sir,
Yeah,
because here invoicing is used here.
yeah, I know. Definitely. But I will not be able to elaborate you on the telecom invoice, because I don't have the system in telecom. I'll be
No.
discussing with ISC invoice. I'll
Yeah,
give you
sure.
that. So that way you can understand. Okay.
Sure.
Yeah, but most of our configurations will be here in the contract
Financial
accounts
account.
payable. This is the area for configuration. This is where we are going to customize. And the biggest area of customization will happen here in basic functions and the business transactions. These are the two biggest, areas of customization. And we'll be testing all these customizations by doing various, end user transaction here, account, payment, document, periodic processing like that. Is it okay?
Uh, yeah, sure. Sir, please let me know that how payment can be. I have to do that.
Yeah. I will send you the bank details. Total course fee is 24,000, right?
Yes, sir.
So you can do one thing. If you are comfortable, you can make full payment. Otherwise, you can make 15,000, let's say after 1 or 2 days,
Yeah,
and
sure.
balance
I will make.
you can pay after maybe 15 days or something like that.
Yeah, sure. 15,000 I will pay, sir. Provide
Yeah,
me that details. I will do.
that bank details I'll send it to you today.
Yeah, sure. Yes, sir.
Sure.
Okay, sir.
And balance
And
you can pay after 15 days or 20 days. You can.
yeah, sure.
Anyway, the course is going to run for 1 month, more than 1 month slightly. So
Okay.
accordingly, you can plan to payment. No
Okay,
problem.
no. Okay, sir. No issues.
Okay.
Uh,
You're,
sir,
yeah.
and sir, this training, how can I practice what you will teach, sir?
Yeah, I'll send you the system access to you. I'll send you the login details. Do you have GUI in your laptop? SAP GUI?
GUI,
Yeah.
no, not in this laptop, sir.
Okay, then I'll send you GUI. If you want to download, you can download. And
Okay,
then
sir.
I'll give you the connection details. You connect directly to this server and then you can practice.
Okay, sir. Okay, sir.
Huh? You can
Okay,
do
sir.
that. Hmm.
Yes.
That server access also I've included in the amount. You don't have to pay separately. It's already
Okay.
included for 2 months. If you want, we'll extend for 1 more month or something. We can work it out. That is not an issue. But you can
Okay.
access our system and do the practice.
Okay, sir.
Okay.
And sir,
So
one
tomorrow,
doubt is,
yeah.
actually, I have a financial background. I am MBA Finance and BCom, but I have not
Okay.
worked in this finance part.
Okay.
So,
Okay. Okay.
I will not
Yeah.
face any issues in understanding
No,
this
no, no,
FICA
no,
part.
no. Now you see, general ledger accounting we are not touching at all. I mean, general ledger account is required. Reconciliation account, various accounts will be required. But we are
Okay.
not discussing financial accounting. There will be separate consultant. We are discussing only FICA. So
Oh,
but simple accounting you will come to know. Like when you start working, I will anyway explain what is the impact on accounting that you can easily understand. You don't have to be, doing any accounting activity experience, not required. Okay, you can
okay.
understand.
Okay. Thank
Like
you,
now
sir.
I have explained today some things about SD invoice and all. You understood the discussion what I did?
Yes.
Yeah.
I was
So
able to catch.
yeah. So this is how it will be. So there's not an issue. You can understand.
Okay, sir.
Okay then. So tomorrow every day we'll meet at 7 or 7:38.
Yes.
What is your convenient
Any,
time?
anytime, sir. 7, I will actually work in second shift, so I am available in morning anytime.
Okay. Even 8 o'clock also okay for you.
Yes, fine, sir.
Okay. I will work it out. I have one more session after yours that I will adjust. If not
Okay.
7, you'll start at 8 because 7 will be
Okay.
bit early. So
No,
8,
there
8
is
to 9.
no issues, sir. If when you are
Okay.
free, let me know. I will be
Okay.
available.
Okay then. Okay.
Thank
Thank
you.
you. Good day. We'll meet tomorrow.
Yeah, thank you. Okay,
Bye.
sir. Thank you.